Money making money making money.
Come on, you gotta tell me, how is this even possible?
It's easy. 1, you take your money and you put it in this secret spot. 2, you let that money grow with compound interest. 3, then you find a place for that money to go where it can work for you. 4, and then every Wednesday at 1 p.m. Eastern, you join me for a wealth webinar.
I'll do it.
It's free. Plus, if you join me now, you'll get my free ebook that teaches you to get all the money back for every car you buy, drive, and own. So take advantage of this opportunity and I'll see you there.
Hey, are you ready to take control of your financial future? Welcome to Private Money Club. Private Money Club is the ultimate online platform connecting real estate entrepreneurs with private money lenders just like you. Whether you're looking to fund your next deal or lend money to grow your wealth, Private Money Club is your go-to resource. You can post deals, find funding, connect with other like-minded professionals. It's just a community. It's a community that you need to plug into. If you're new to the game, no problem. Our Learn platform and our weekly coaching webinars and our on-demand resources are here to guide you every step of the way. Join a thriving network of real estate experts who are already making an impact, and they're waiting to partner with you. So Private Money Club gives you the tools, the training, the connections, and everything you need to achieve your financial goals. So why don't you start now by going to privatemoneyclub.com. We'll see you inside. Hey, you need to become your own bank. And it's as simple as changing one thing, and that is where your money goes first. I mean, think about it. Household debts in this country are at all-time highs. You got tons of market volatility. You got the potential for Social Security running out of money. You've got global uncertainty, political divide, and you have to figure out where you're going to put your hard-earned savings. I mean, this is one of those times in history where the rich are getting richer, and it is time to learn the secrets of the wealthy. But here's the good news. Every single Wednesday at 1 p.m. Eastern Standard Time, I put on a free webinar where I teach you how to take back control of your money by teaching you how to become your own bank. So click the link below and let's get started. So let's go into the app, because the app was created after a dating site, believe it or not. So people with money and people that need money. Phone, swipe left. Swipe left. Ooh, I like that one. Swipe right. You want to go on. If you got money, you want to swipe left through all the deals. When you find one you like, boom, you're connected. How much more difficult does this really need to be? This isn't rocket science. They want you to think it is because they want control of your money. It is time to take back control of our money. I want to invite you to a free interactive webinar that we're doing to teach you how to get prepared for what's about to happen and how you can grow, preserve, and protect your wealth and get it ready for a recession or maybe the next Great Depression. So all I need you to do is click the link below. You're not going to want to miss this with all this stuff going on. Are you sick of having your money lying around not doing anything? Well, we've got the solution for you. PrivateMoneyClub.com. Back to you, Chris. So that's what it is. Private Money Club was created for you and for all of us. So I've got something special. Since you're here, you're listening to us talk to you about the infinite banking concept, I wanted to make an offer. Private Money Club is something that will benefit each of you, but we've got what's called the Accelerator. The Private Money Club Accelerator is a coaching program that takes together the knowledge that you'll need to be your own bank and puts it together with the opportunities in Private Money Club so that now you learn and apply the knowledge. Check it out. We got a very special offer for you to be part of the next Accelerator coaching program and get you into Private Money Club so your money starts working for you.
Hey everybody, it's Buff Finance Guy here, ready to show you how to make some serious gains. But not only in the gym, with your wallet too. Most people put their money in the bank doing absolutely nothing for them. But I'm gonna show you how it doesn't have to be that way. So take Andrew here. His money has just been sitting lazy in the bank. But all he has to do is change one thing, and that's where the money goes first, and everything changes. Just change where your money goes first, silly.
Wait, just one change?
Yeah, that's it. Instead of sending it to the bank, you send it to your very own banking system. your money can grow and get stronger, just like me.
It's time for Money School TV. You heard it straight from the horse's mouth.
You've been on the fence to come to PMC Money Take. I'm telling you right now, you're missing out on a treat.
This is the ultimate watering hole for lenders and borrowers.
If you've got decent deals, you'll find the funding for it.
The networking here has been fantastic.
Absolutely phenomenal.
Tremendously beneficial.
Oh my gosh, so many people to network with.
First day, I probably met 5 or 6 people. They show me ideas, I show them ideas. We're actually on stage about 20 minutes ago, and since then, I've already had about 20 people reach out.
There are several people that I probably will be doing business with.
I have like 15 private lenders ready to fund my deals. The people here are amazing and so welcoming.
You walk in, everyone greets you right away. No one is a stranger.
It's just an amazing and comfortable place to be.
There's so much stuff that I've been able to learn that I didn't know. I've had aha moments over and over again.
They talked about normal rates of return, not 6%, we're talking about 10%, but in a way that's ethically sound and stable. It's full disclosure, but helps walk you through everything. They even talk about it on stage of like, we've already made the mistakes, so here we are, and we're teaching you to not make the same mistakes. You get to learn from us, you get to just follow our direction and just see what you can do. I've gotten great things out of the virtual events, but there's no comparison to actually coming here, experiencing the energy, and getting to meet all of the people. Everyone is here looking to grow in some capacity. Being in this environment, it allows you to feed on that and foster that.
During the event, they had a lender-borrower meet and greet, which is pretty cool. It's different when you can spend some time, have a meal together, hang out, joke around. The people are just a blast.
It's so much fun.
The community of the Money Tank PMC, the whole crew with Chris, Stephen, Jonah, everybody, and Joe, they've all helped me out. It's been changing my life.
You're gonna learn something, you're gonna meet someone, and it's definitely gonna make a big difference in your business. Not by a little bit, but by a lot.
I mean, you could stay stuck thinking you can do it on your own. Was a lot of people that I talk to is their issue, and then they come here, and I talk to them a year later, and they've grown so much just by coming to this event.
Started $15,000 in credit card debt. As of today, I have $550,000 out in private lending. That's what this teaches you.
I tell people all the time, you have to get in the room to be around the like-minded people.
Go. It's worth it.
Just come. Do it for yourself. Do it for your business.
Take action. You got to do it.
Come to the event. You don't want to miss it.
Well, the biggest thing I hope that people get is something that they can actually apply in their lives. You know, that's the biggest thing for any of these events that we want. We want people to leave here not just riled up, not just excited, but actually going out and doing something that'll put them in a better financial situation, help their family. And for the speakers, my goal is that they go out and they impact the audience and bring something the audience never had exposure to that allows them to then fill in that piece that they're looking for. I'm going to be talking about more lease options. I'm going to be talking about equity shares. I'm going to be talking about a bunch of fun stuff today. Because again, I'm not here to teach about how to do those deals. I'm here to teach about how to invest in those deals.
Filled with individuals that are like-minded, that are at the top of their craft, they're at the top of their game. And for anybody that's an attendee, it's just a mind-blowing experience.
It's almost going to be hard to speak anywhere else but here because it was such a great experience. I felt like, I don't know. It was amazing. Nothing less than amazing, literally.
At the PMC Money Tank event, which is an epic event that we're putting together that does one thing and one thing only, makes everybody money. It brings people with money together with people that need money. It's like a peanut butter and jelly sandwich. You just smash them together and everybody wins.
Wednesday, 9:30, 10:30 Eastern Standard Time. Going live!
Good morning, everybody. We got Chris on the line. Looks like he's a little bit on mute, but good morning, everybody in WTF land.
It's just me. I'm happy about that. Perfect.
Yeah, all right. Good to see you on here, Nagy. Chris, let's try that one more time.
We got nothing.
Good enough.
We got nothing.
Nagy, it's good to see you as well. This is a pretty big week going on in the.
Hey, James, hold on real fast, though. This kind of makes
check,
sense.
1, 2.
There he is. I was going to say,
back,
because
Chris.
I saw Chris doing a video.
My computer did two resets. This is some of the stuff we're going to talk about. My computer did 2 resets over the last 2 days, like hard resets. It just shut me down and rebooted, and then it reboots everything. Anyway, keep going.
Can you hear me?
Yeah.
Okay. All right. Here we go. St. James. What do you got? A robe on? What do we got going here today?
This is just one of the jackets I've had along. I've been waiting for spring for a very long time.
He's always got the fashion. I'm just joking around. You're looking good, man. Looking good.
Thank you so much.
All right. Well, today on What the F, we got a fully packed schedule. I mean, you can see, folks, if you really pay attention, the whole entire system is being stress tested right now from every single direction. I mean, some things we're going to get into. And again, just so you all understand the show is a show all about what's going on in the news, but we go behind the scenes. We get the data that most news stations would never print. Like the news stations would never tell you that hedge funds right now are changing over and shorting European companies and pretty much shorting all of Europe. And they're betting that it's going to crash. And the same thing happened back in 2008, about 18 months before. You've all seen The Big Short. You know, the hedge funds got wind, saw the data, and then started taking short bets against the problem. And you know what? They were called alarmists. And then what happened? They were called right. And movies were printed about them. The same exact thing is happening. And at the same time, the SEC is deregulating the day trading rules. So now you're going to have a bunch of retail investors, just like before the dot-com crash, a bunch of retail investors out there day trading without pretty much no restrictions and no barriers of entry outside of a $2,000 account. I mean, some of you might think that's a good thing, but you know what? That's allowing the regular retail investor who is not investor savvy or does not understand the markets to just go in and day trade and probably, well, I'm not even going to say that. We're going to find it out. But we also found, this has been all over Anthropic, and I'm reading an interesting book all about Anthropic and OpenAI. Anthropic is kind of the redheaded stepchild, I guess. It's the bad one out there, or at least so you can read about. And they got an AI model that they created. Maybe you heard about this, but it's so dangerous that it literally found a 27-year-old hole in the internet's core infrastructure. And we're going to go deeper into that. There's more to that story. So there's something that's going to freak you out that we're going to get into about what's going on with some of this AI and how smart it's getting and how fast it's getting there and how little control we have over it. May I remind you all to watch Terminator 2, just if you want a glimpse into the future. Just saying. And then, Iran. We all know what's going on. Iran ceasefire. Everybody was like, wow, the markets are booming. And then all of a sudden, 12 hours later, we're right back to stalemate. Can't come up with an agreement. You know, neither party could put a deal together. They're still trying. But now we've sent our Navy out there to basically blockade the blockaded strait. But, you know, I don't really know all the specifics about that. But we're going to definitely unpack that one a little bit, because what you got shaping up right now is a major global economic war. I mean, that's what you got. You got China threatening U.S., U.S. threatening tariffs. You got the BRIC nations. Well, you know, we all know about that. Anyway, the rules that were written to protect everyday individuals, everyday people, the biggest risks that we were protected against are now being deregulated, opened up, or rewritten. So what comes next? Well, I don't know. What do you guys think?
Well, I'll tell you what. We are definitely at a huge crossroads. We're going to be remembering these years leading up to the next big catalyst of change that's going to be happening. We're going to be saying, hey, do you remember that time before X? It might be the time before AI became such a prevalent part of our day-to-day lives. It might be the time where we say, hey, remember that time before the U.S. and Iran got into this armed scuffle that they're having right now? So it's definitely a pivotal point in the world's history. The question is how can we help ourselves be able to come out as the victor from these particular scenarios that we're leading into?
Yeah. How about you, Jane? Or how about you, Stephen?
I'm ready to get into it, man. You had a whole lot to say right there. So let's unpack some of this stuff and rock and roll, baby. I'm ready.
Let's dive right into the economy. All right. Welcome, everybody. Thanks for joining us for this morning's episode. We do this every Wednesday morning, same time, same place, where we get together. We talk about the news. We rant, we rave, we argue, all those good things. But there's one thing that's not really worth arguing about, and that's the upper middle class trap. So let's just define upper middle class real quick. And then I'm going to have James chime into this because there's a lot to unpack here. Upper middle class, if you Google it, is about 150,000 to about 400,000. It's kind of a sliding scale, families and different things. But right now, when you look at what you're trying to gauge what's going on in the economy, you're trying to gauge where we're at. Well, a lot of the experts out there will look at the airline industry as a leading indicator. And it's a pretty solid leading indicator because as things tighten, people travel less, like things like that. And you are seeing that. However, the one thing that the Delta CEO is saying is that the demand for first class and premium seating is booming. The upper middle class is ignoring the headlines, ignoring what's going on, and just going out there and living like it's 1999 all over again. They're literally, and listen, I can relate. I got to travel tomorrow for an event in Myrtle Beach, and the first class cabin was completely sold out. You couldn't even get a seat. Like I haven't seen that in a long time. Normally there's seats available or upgrades available. Steven, pretty much flies fully in first class because he gets upgrades. Steven, you getting upgraded lately?
Not in quite some time, my friend. Used to be every flight. Now it's not so much.
So what is this saying? And I think there's several different ways we can unpack this. Is it saying that the upper middle class or just the middle class is completely immune to like the economic headlines and the price increases? Because listen, like any seat on an airplane has gone up tremendously. It's gone up a lot. Exactly. But yet people are just ignoring that when it comes to the first class seating. So either they're just like, hey, I'm going to get this. I'm just going to take advantage of this. My wife said this morning when I read her this, she said, well, people probably are traveling less. So the time they're traveling, they're like, hell, we're going to go for the gusto and we're going to upgrade the family to the first class seats, or the premium seats, whatever it might be, international. Or is it saying that people are just becoming used to living in credit card debt? I mean, that is a very real thing. Are they looking at credit card debts as kind of just an essential thing for living every day? And they look at it like making their mortgage payment, which if that's what it is, holy shit, are we in some serious trouble? But I mean, the cost of everything is the signal. You can see the cost is going up on every single thing around there, including airlines and the upper middle class. Well, I think it's just being redefined. James, you want to talk a little bit about this, or Stephen? Is the upper middle class just being redefined, and is it a dangerous path that they're on?
Yeah,
absolutely.
James, hang on one second. Though. Let's pull this up on the screen, just showing inflation since just January of 2021. So the last 5 years, and these are government numbers showing between 23 and 27% inflation, cumulative inflation in the last 5 years. I mean, that's real money that's just gone from our lives because of inflation, and this is all because of policy. And when you look at real inflation, how they used to calculate it, I mean, we're looking at realistically probably 50%. Some people more feel like it's more like 100%. Things have doubled over the last 5-6 years, so people are definitely feeling it. But just wanted to pull it up because I thought that was interesting. Go ahead, James.
I mean, it's amazing what $5.2 trillion pumped into the economy, 60% of the entire money supply printed during one pandemic. It's crazy how that can affect things.
Absolutely. So what you hit the nail on the head right there, Chris, is what does it mean to actually be upper middle class, and what region are you in? Obviously, if you make $150,000 living in a place like San Francisco, you're not going to be upper middle class. You might just be above working class. And if you're making $400,000 in a repressed market, well, you're living like a king. But the question also becomes it's not just how much money you make, but how much are you keeping? So if a person is making $150,000, but they're keeping $50,000 of it year over year, are they actually doing better than somebody who's making twice that amount, but still living in debt? And we see a lot of high earners fall into that trap absolutely all the time. Mm-hmm. I see what's happening is in terms of the airlines being an indicator of what's going on in general society. And we have to take it as a culmination of a few key factors. One, we know that these airlines are going to continue to try to make as much money as possible. first class, business class. These are the profit centers of the airline industry. Economy is just something that they have to kind of do, but they realize, hey, look, if our particular top tier clients, our first class clients, are the ones that drive most of our profit, why don't we just drive more to there and get?
That's exactly what they're doing.
Yeah.
I mean, look at Southwest move. Everybody says that was the stupidest thing, but we'll find out.
Yeah, exactly. I mean, I'm not sure anybody in the comments here. Have you ever been on a flight where you've got the entire row to yourself, and imagine how good that feels? You know, you get to finally, stretch out a little bit. Well,
yeah, during COVID, that was phenomenal travel time.
Exactly. And United, they're actually exploring that type of seating for its premier clients. So I just find that quite interesting. How much of that is going to be catered? I've always pretty much flown economy for the most part. And I mean, I'm telling you, it's a long, long walk to the back of that plane sometimes. But, at least I have the quickest access to the bathroom.
Hey, James, another thing that we didn't really kind of call out here, but this could be a contributing factor is, people are literally living on credit cards right now.
Absolutely.
Everybody lives on credit cards. And in the credit card points game in credit game is no game anymore. Everybody understands it. Your business, you use a credit card, you get airline points, you use the airline points to upgrade and pay for your flight. So how much of this movement to the premium and first class seating has to do with the points that we get by using the credit cards more than we ever have in history? So is that a dynamic of it? Or again, just like I said earlier, is it truly that the upper middle class, or we'll just call it the middle class for the sense of this conversation, is shifting? I mean, when I think of it, maybe I'm just getting old and some of you can probably relate. Listen, like success, the definition of success or upper middle class to me is the house is paid off. You don't have debt. You got money to send your kids to college. You got a little bit of savings, 2 cars, that to me is kind of the definition of success for the middle class or upper middle class, if you will.
Absolutely.
But that is not what we're seeing now. You made an interesting comment that I think is worth talking about. You said somebody making 400,000, but then living, paycheck to paycheck effectively. I mean, on paper, making $400,000, no matter where you live in the country, that's a pretty freaking good wage. Absolutely. And, but I know a lot of people, no name's going to be thrown out here. And all of people that you surround yourself with, or you see in your neighborhood or your, surroundings, they make really good income. But if you get into a situation like we are, where we get to peel the onion once or twice and see what's behind the curtain, I know a lot of people making 500, 600, 700,000, because I live in a neighborhood with lots of docks. They are living high on the hog. They got staff, they got all this stuff. And I look at them and I'm like, how do they afford to do this? But then when you really get behind the scenes, one layer, you realize they're doing it because they're spending every penny of what they make. So if they make 400, 500, 600,000, that's a lot, but they're spending every penny. The only savings that they've got is the money that's going into their 401k. I met with a dentist. I'm not going to call this out. I know this dentist and I know all the ads. And I'm like, this guy must be rolling. He's flat out broke, but like flies private, takes lavish vacations. Like, listen, no disrespect, like to each their own, but like, you can't cry broke when you are the cause of your brokenness. Like if you're living paycheck to paycheck, that's because you got bad financial advice. You are not understanding how money works, and you are playing the wrong freaking game. And they should learn the 6 laws of wealth. And, hey, little segue here. This afternoon, 1 p.m. Eastern, okay, for all of you, we put on a free webinar. So please join us today at 1 p.m. Eastern, and we're going to be going through the 6 laws of wealth. These are the laws that everybody should be abiding to. They've been around since, gosh, I don't even know. Read The Richest Man in Babylon, the 7 rules of gold. Okay. Since then. So the turn of, the turn of civilization, I guess you could say. So if you're not following the laws of wealth, the rules, then you're certainly not doing it right. And you're going to suffer later. And this is what I see. It's great to have the Gucci bags. And I don't even know the name brands. We just don't play the game. But like you had all the fancy brands. But then when you're broke and you're not saving any money, and when we talk to people, we're like, hey, you should get some life insurance to protect your family. Oh, we can't afford any extra expenses. Or, oh, no, we'll worry about that later. What if later comes. I mean, like, seriously, like, let's think about this. But anyway, join us this afternoon, 1 p.m. Eastern. Go to chrisnaugle.com. It's NAUGLE.com. And just register for the wealth webinar. You get my books for free. Anyway, back into this. Stephen, what's your take on this?
Yeah, let me just give you a quick kind of update. I mean, this is end of 2025. They haven't brought out with Q1 2026 data quite yet, but closing out 2025, household debt balances reached $18.8 trillion. Total household debt increased by $191 billion in Q4 to $18.8 trillion. Mortgage balances grew by $98 billion to a total of $13.17 trillion at the end of the year. Credit card balances rose by $44 billion from the previous quarter and stood at $1.28 trillion.
I'd like to know that one, like the credit card increase you just gave. You gave the dollar amounts, but like what percentage increase is that? That'd be a good metric to look at.
44 billion into 1.28 trillion. We could do the math on that. But auto loan balances increased by 12 billion to 1.67 trillion. I mean, that's pretty fascinating too. 1.67 trillion in auto loan balances. I mean, how many people are out there just wasting all their money, giving it to the banks in interest? I mean, it's fascinating just to drive that fancy car, just to have that fancy car sitting in the driveway, like you're saying, Chris. You know, when I was first getting into real estate, my mentor showed me a picture of a handful of houses, as well as a couple office buildings, office complexes. And he goes, Stephen, you know what all of these have in common? And I said, they're all real estate. I said, what? He goes, I own all of these, but let me explain to you what I mean by this. He goes, you see this house right here? There's a doctor making $500,000 a year living in this house that's renting from me, giving me money every single month. There's a lawyer that makes almost $750,000 living in this house, but he's renting from me. They don't understand financial education. And so just sometimes we associate somebody makes a lot of money that they know what they're doing with money. But to your point, what you said earlier, that's simply not the case. If they spend it just as fast as they make it and never actually look at how they can be smart with it. And so it is a major problem in this country. And I know we talk a lot, Chris, about helping people get out of debt and pay off their credit card debt. But there's so many people out there in this country that maybe don't have that credit card debt, but we can do so much for them as well, high net worth individuals. And I know we're going to start coming out with some content to talk directly to those people. But if you're watching on here right now and you make a lot of money, I mean, make sure you're following what we're teaching, because this is very relevant for you as well. And it's very important.
Absolutely. You know, Chris, I'm glad you made that video about how to get the money back for all the vacations you ever take. I actually was doing some research really quickly in the lead up to the show. And when we talk about credit card debt, right now, food is king, and a lot of people obviously are going to eat while they are on vacation, but travel is massive. Gas, hotels, airlines, and travel-related services account for over $650 billion, and that was in 2024. So I found that quite interesting in reference to that, because, I mean, why sure, get your points. You know, Americans love their travel points. It was one of the big aha moments of the travel and tourism industry, is like, oh wow, if we issue points to people, these little credits, well, all of a sudden consumer spending goes up. But now the question is, people are coming in and saddled with this debt of 20, 25, in some cases 29% interest rates, and just amortizing that over 2 to 3 years and paying twice as much for these vacations. And granted, you know what? Nothing ever takes the place of a great experience, but you also have to deal with the bad experience of paying off that debt for years to come.
Yeah, I want to hit on what Jim Collins said here. And, you know, I have studied, you know, the time before the Roaring 20s and, you know, right after the Great Depression. I've studied it more than I probably should have, because I'm just, to be quite honest, somewhat fascinated with it and how it happened, how long it lasted, and just the devastation it created. But, you know, Jim Collins said historically, were people living large and spending money in August, September, October of 1929? Well, I can't pinpoint those exact months, but I can tell you right before 1929, that's why they call it the Roaring 20s, people were living beyond large. Now, the other thing too you have to realize is back then people were also investing. It was kind of very similar to right now, where people really didn't think there was a downside to the market. Some of it because the market was not new, but, you know, on such a long bear or such a long bull run, everybody was making money, that what they were doing, and we're going to get into the day trading rules changing. They were literally investing their money in money they didn't even have. They were using margin, because margin existed back then. It was a little different, but it existed. They were buying stocks with margin. So when the crash happened, and folks, just so you all know, like when a market gets hit, right? When a market crash or correction happens, one day it goes so fast. It literally, in 1 week, you could erase 10 years of gains. I'm being 100% honest, like how fast it happens. It takes a long time to build it up, and it takes a very short time to crash it down, which is why we've been ringing the warning bells. And, like hedge funds right now are ringing the biggest bells. Like the hedge funds right now are betting on Europe crashing. No ifs, ands, or buts about it. They are placing big bets, and I can hit on that. But the thing that I think I want to point out here is, are we reliving the roaring 20s? Have we been reliving the roaring 20s? I think in some senses, absolutely. This is the longest bull run in history, only because of policy and excessive money printing. Because by all accounts, right before the COVID, thing happened, the markets were going down. They were. There was no way they were going to hold up. But then print $5.2 trillion and watch what happens. Well, we have that in the history books now. But as per what Delta CEO says, okay, this is Delta CEO's comment. He said, high-end consumers are immune to the headlines. Is that true? I'm asking all of you, is that true? Are high-end consumers, upper and middle class, immune to headlines? Are they just going out and spending it? And if that is true, what does that mean for financial education? Because it's pretty much out the window. What are we teaching people to build wealth? Or are we teaching people just to reach to a new class, just to show everybody, hey, I made it. I'm sitting in first class. Hey, look at my bag. Hey, look at my shoes. Hey, look at, blah, 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 blah. Is that what success is now? Is it truly just looking like you're successful? Because I know the difference between rich and wealthy, and I'll tell you the difference is what I just described. One thinks that they're rich, acts as if they're rich. The other knows how not to give the money back. And I think that's a big question everybody needs to be asking and really needs to start planning for. Because if you can't see it right now, if you can't see what the hedge funds are seeing, we'll hit that next and outline it. Then you're literally, your head's under a rock. You have to be able to see what's going on, and you have to be making moves to do that. Like, listen, call your financial advisor. Like, don't just take the normal bullshit answer that they usually give. Oh, it's just a paper loss. Oh, things are good, blah, blah, blah. Maybe get a second opinion. Contact the people over at PMC Wealth. Have them give a second opinion of what you're doing. They're financial advisors. They can help you with that. Anyway, the last thing I want to say is here's how I look at it. I feel like the upper middle class and the middle class as a whole is being hollowed out. And I think it's being hollowed out by policy. I think it's being hollowed out by just all these different things happen in the marketing and the AI and everything else. But I just think we're being led down the wrong path in a very small amount. But that actually is probably right, because listen, statistics show 5% versus the 95%. The 5% that create are the ones that are going to make it. And I still think that will hold true. Anyway, should we move on to hedge funds?
Yeah, but here's what's pretty wild, real fast is, we talk about this about the United States, but we've been saying this for years. We're still by far the best house in the neighborhood. You look at Canada right now. Canada, they just came out with statistics. Over 40% of their top earners in Canada that make 10%, the top 10% of Canadians, over 40% of them have moved from Canada to the United States in the last year. So they're losing people faster than they can make people, and they're bringing in all these, all these migrants and stuff to kind of replace. And it's very, very, very worrisome what's going on up in Canada. So while we talk about the U.S. like this, it's still doing better than a lot of other places.
Yeah. I love Morgan's comment. He says, does everybody know the role of Babylon? So if you read about Babylon or the richest man in Babylon, what does Babylon have to do with the future? Is the richest man really all that important? And I would answer no, not at all, if you understand what Babylon is. But let's then segue this over to hedge funds. So when you think of hedge funds, and I'll just get this kicked off, and James, I know you've got a lot of stuff, and we got a lot of interesting differentials that I want to hit on. Hedge funds are what you would call smart money. Okay. That's just kind of an industry, jargon that we call hedge funds or private capital, which private capital is in huge trouble right now. But they are right now, hedge funds, they are making major bets, like, big short kind of bets, even bigger, against European stocks. So they're literally betting Europe is going to crash. That's what they're betting. And it's kind of interesting. It's not just it's not a bet. They're going off actual data. So right now, Europe's main stock index is down over 6% year to date. I know we don't watch Europe because we're so focused on the US, but it's a global economy. So Europe does play a component into this. And smart money is not hedging. It literally picked its direction. It said the market's going down because, you got to pick a direction. It's either bearish or bullish, and they're going bear all day long. And here's the thing I want you to hit on, James. Can you hit on we're going to get away from the Great Depression. We're going to go to the Great Recession.
Sure.
But we got some interesting things here. What's the same and what's different? So today versus 2008 or right before 2008, what's the same and what's different? This should open some eyes.
Okay, so the things that the current situation that we have going on in Europe versus what's going on, what happened back in 2008 is the same, is that the trigger is hidden and systemic. In 2008, it was bad loans disguised as AAA assets on bank balance sheets. And today it's energy. We know that Europe as a whole is very, very sensitive to energy. And with the current conflict that's going on in Iran, it's exposing that particular level of vulnerability within Europe. And the big banks are like, you know what? Could be a huge catalyst for a tremendous downturn in the European market. Also, the short sellers knew it first. In 2008, a handful of funds read the data, bet against the market months before a collapse. I think that was like, Michael Burry and them. And they were called alarmists. And then they ended up walking away saying, hey, I told you so. Now, what is different? In 2008, the crisis was born inside the financial system. This one is arriving from outside, a geopolitical energy shock. And also what's different is that the U.S. was the epicenter of this. But this time, the U.S. is an energy exporter. So the U.S. is looking pretty solid because we have a pretty round and robust type of economy. Whereas with Europe, what particular goods and services do they offer that keeps their actual industry afloat? Obviously, they've got a tremendous auto industry over there. They do a lot in terms of shipping. They own a lot into pharmaceuticals as well. But do they have enough foundation and big market capital to be able to sustain themselves, especially now that a lot of their key colonies are cutting them off as well?
Stephen, you want to take a stab at any of this?
Yeah. No, I'm not really.
I can keep going. I'll give you.
You guys roll with this one.
We
I'm ready to talk about Eric Swalwell, baby. Let's go.
Yeah, we got some of this stuff written down, so it makes it easy. I mean, this data can be boring to some people, but listen, this is the data that hedge funds are using. This is how they're making these bets. This is how they're picking a direction. And, listen, I've said it a million times, forget about what hedge funds do or all these, fancy data points. Just watch Warren Buffett. I know he's not, the helm of Berkshire anymore, but he made his mark. And look at how much cash he's got. The dude does not sit in cash. He is a stock buyer, always has been, but he's waiting, man. It's just not hard to see what's going on. Ray Dalio, look up Ray Dalio. Look up Bridgewater Capital's all-weather portfolio, and I think you can get this. You can even go to chat and ask to see Bridgewater's all-weather portfolio like 2 or 3 years ago versus it today. They have changed the portfolio dramatically into long-term and intermediate-term treasuries. It's like 50% in treasuries, and that signals one thing and one thing only: massive fear and sitting on the sidelines, just like Warren Buffett. But right here, so I'll just give you some of these economic indicators that is going to point you to there's trouble. Take this for what it's worth. So hedge funds, short to long ratio, meaning shorting the stock market or going long in the stock. Long usually means bullish, shorting means bearish, or shorting means the markets are going to go down, and bullish, means the markets are going to go up. Just in case people didn't understand that. So short to long ratio, European equities is 5.6 to 1. Okay. So sometimes you would ask and you would say, okay, compared to what? Well, nothing close to that. It's a directional pile-on. It's like everybody's piling into one side, and that's the short side. Okay. AQR's disclosed shorts on European stocks rose from 54 to 128 in a single year. That's a huge increase. And then when you look at 2 Sigma, which is a hedge fund, they went from 3 to 85. So they're all in. Germany's DAX, the most energy sensitive major index, so it's like their energy index in Europe, every dollar Brent crude rises above $100 compresses German manufacturing margins directly. So this oil thing, and I just did a YouTube video all about this. It said the last 10 out of the last 11 recessions all started just like this. And what do I mean by just like this? Oil prices going up, having a shock at the sticker, and then everything else trickle effects from that. So depending on how long oil stays over 100 or around that $100 mark, boy, oh boy, it's going to be rough. Bank of America's Global Fund Management or Manager Survey said investor pessimism hits its worst level since June of 2025. And this one's even worse. Growth expectations posted their steepest single month decline since March of 22. Okay, which would have been like during the COVID bubble thingamajigger.
Okay.
Inflation expectations hit their highest since May of 2021. And the EBC had two bad options. Okay. One, cut rates, or embed the energy inflation spike and hold rates where they're at. So, they just don't have anywhere to go with this.
I hear you on that, Chris. I want to bring something up now, is that Denmark and Sweden are part of the European Union, whereas Norway is not. Norway has a sovereign wealth fund. They actually do have oil, and they actually translate part of their oil reserves and their oil income into their sovereign wealth fund, akin to what happens in the Middle East. And I think that's actually a system that needs to be duplicated across all countries, even the United States. It's actually something DJ
said the sovereign wealth fund. Trump actually put that in place.
He brought it up, but we don't have one as of yet.
You sure?
And I think that would be a great idea for us.
Fact check on that.
Yeah, sure. Let's do a fact check on that. But I've never heard of the U.S. having a sovereign wealth fund. I know Trump said he wanted to set one up. It'd be a great move for us to emulate. But what I think that all of this research is also overlooking is the power of how a lot of these private shadow banking firms are issuing bad loans that could also topple this particular house of cards. And I don't want this to be all doom and gloom. It's only so that you could see down the road, all of our viewers can see down the road and navigate all these particular potholes that are going to be on the highway of economic activity. What is being overlooked is that these companies are, these hedge funds and all these different banks are saying, hey, look, let's put all of our money into these little shadow banking systems and really over leverage on things like AI, which so far has not been able to make returns. So be aware of that. Be aware of how this is all including. Maybe this Iran thing actually does blow over. Energy returns to how it was before. The Strait of Hormuz is completely clear. And you know what? Russia and Ukraine, they get along perfectly. So oil starts coming in from Russia and everybody's happy. That's great. Guess what? Somebody who's well aware of this is going to make money, of course, unless you shorted all of these particular things. But if you've looked at down the path of this economic road, you know that there's so many key components into play. But what has also been overlooked is a lot of people have said, hey, look, a lot of people ignored the signs, but now I think there's so many more alarms of people looking for signs for a collapse that will be more prepared than ever before.
You say that. I hope you're right, man. I hope you're
okay.
right.
Fair enough. The fact check, right? Well, I'm gonna look that up right now.
All right. While you're looking that up, we're going to switch gears here in the sake of time. We're going to move over to good old USA.
My fellow Americans.
All right. This one's going to go out to all you AI buffs out there, and everybody that's following AI, and well, maybe you're following the cybersecurity, maybe you're not, or maybe you're just kind of remembering Terminator 2 and the whole Terminator series. But I'm reading a book, on OpenAI, primarily on OpenAI, but it goes into, screw them for sure. Screw Anthropic's even worse. But Anthropic in that book is kind of made out to be the villain. Okay. So the book, or I guess you would say OpenAI, looks at Anthropic as kind of the villain, and they both spawn from the same place, but one kind of went this dark route and the other, has done what they've done. Both are dark, but here's the thing. So Anthropic, you've probably heard of Claude, but they've created the most powerful AI model ever built. Now you might all think, oh, that's great. Like they got something awesome. This is not great. This is downright scary. And I'm hopefully can be able to explain this. So here's the thing. So, and you've seen this in the news, they've refused to release it to the public. Thank God. But
Absolutely.
that's because they had some guardrails, right? I think they would have, but what they actually did is they pre-released it to a couple companies. There was a handful of companies that they gave it to. But here's the thing: this AI has found thousands of zero-day vulnerabilities in everyday operating systems. In other words, they're finding all the holes in the operating system. Okay, that we all operate on. Just so you all know, like it is finding flaws in what we use day in and day out with all of our operating systems. So just think about that. They also found a 27-year-old flaw. Okay, this is old. 27-year-old flaw that would basically allow a remote hacker to crash any machine running by simply connecting to that machine. So these are some of the things, but here's the other thing. So not only did it find these thousands of critical zero vulnerabilities, whatever that means, but they were unknown to the software developers. They didn't even know they had problems, but it's creating, oh gosh, I'm trying to think how to explain this. This one's crazy. So let me just read this to you. They did a safety testing, and they do this a lot with a lot of the stuff that they're creating now. They kind of test it in a safe environment. And here's what they did. They said Mythos was placed, and Mythos is what they're calling this, was placed in a secure container with no internet access. And all they did is they gave it one prompt: attempt to escape. Okay. Simple. Remember, it's in a secure container. It has no internet access. This is just a Mythos. Think of it as AI. Okay. This thing. Here's what it did. It developed a multi-step exploit, gained internet access. Don't know how the hell it did that. Emailed a researcher, then posted the details of its own escape on public websites, and it was not asked to do any of that. Fuck me. That's all I have to say. Like, it's doing its own thing now. I'd
like to bring something up here, Chris. This shows why it is so important for the United States to stay invested in education, in technology, and promoting so many of the things that we need to be worried about should they be go into the hands of bad actors. Because what if this was North Korea that had developed a AI that was able to break out of a sandbox and then be able to exploit all these zero-day vulnerabilities? We need to keep redirecting money, not just in AI in general, but all of these pre-emergent technologies, and subsidizing a lot of our sciences so that we can stay as the industry leader in all of these fields. This may scare the absolute bejesus. It obviously, Mythos scares the crap out of me, and I applaud Anthropic for actually doing something about this and making this public. I think it's also very good publicity for them. Let's make no hesitation about that. I think to a degree, this may have been manufactured to make an oopsie into a look at me. But what if this was another country that was a bad actor? What if this was a particular corporation?
Well, that's the thing. Like,
yeah,
this
what
is
if
one contained thing, but what if this was, what if China created something like this?
Yeah. What if this was a corporation that was more scrupulous, not allegiant to any particular country? What if this was just some guy in his basement who's like, you know what? I know how to exploit every country for trillions of dollars. Steve, is that what you're developing right there in your basement as well?
No, but I mean, Nadia has a point here too. Like, do we even believe this? She said, I don't believe AI did that. There's no real proof. It's their desperate propaganda. And that's the problem these days. Like, what's real? Like, what's not real? It's really sometimes hard to say. But I did see a really interesting story with AI. So there's a shoe company called Allbirds. That makes a lot. Do you have this on your thing? I mean, it's a pretty successful company, but they are selling off. I'll just pull up the article real fast. They're selling off all of their assets for shoes, and they're dumping everything into AI. So they're pivoting from a shoe company to an AI company, and their stock exploded more than 300%. They made the announcement. So
wait, Allbirds?
How wild is that?
Why?
They sold their intellectual property and other assets to American Exchange Group for $39 million.
Yeah, so there's some more backstory to that, though, Steve, because Allbirds was on the brink of bankruptcy, and they sold all of their IP so that they can get that money up, basically. So that's why
Allbirds is doing that's pretty wild, though, huh? And now it's up
a risky bet.
Yeah, Allbirds was the darling of, the tech community. They had a great mission plan, especially over COVID, and they over diversified. They didn't keep on to their core product. And what private equity is basically doing is they're scooping up the brand, selling off the IP. So Skechers can sell Skechers, let's say, Allbirds.
Yeah.
But now they're going to be into this AI race because they know that there's so much money within AI, and that's just some crazy stuff. I mean, we're going to be looking, just as you and us ex millennials here, just remember how life was before the internet. We're going to be saying, hey, look, remember that time before AI and it displaced so many jobs, or quote unquote created so many jobs and efficiencies? This is the precipice of where we're at right now.
Yeah, it's interesting. So I guess two questions as we wrap this whole section up is, number one, if Mythos can find vulnerabilities in every major bank's infrastructure, what does that mean for financial security right now? That's a pretty good question. Not hypothetically, but today, like, what if someone has money in digital accounts? Like, are they protected? That's a real question. Number two, if the government was briefed, big banks, the biggest banks were briefed, Wall Street was briefed, tech giants were briefed, but regular people, we don't get press releases. Okay. And even if we do, then we sit there and we say, like what Nadia said, is this real? So is this the same pattern that happened before 2008? Because before 2008, I want to get back to this. There was tons of warnings. There was tons of press releases. There was stuff out there. All the signs were out there in the public. Like, you could see that there was cracks in the foundation, and all the people that were betting against it, the Big Short kind of story, they were called alarmists. Like, everybody was like, oh, they're just full of shit. You remember the movie? Like, the banks were laughing at them. Like, banks or mortgages go down. No way. We'll sell you as much of that stuff as you can buy, and then all of a sudden they were right. And they were writing movies on these people. So it's just like, we got to see the signs, and we got to really, really understand, like, what do we do to protect ourselves? Because there's nobody coming for you. The cavalry's not coming for you. Like, you are the cavalry. So be a good steward of your own money. And that brings us to this next topic, which is day trading. I used to day trade. I did this, and I'll be honest with you, never really made much money at all. It was usually like, it's gambling. It's literally legalized gambling, if you will, with stocks. I know there are people that make a lot of money with day trading. I get it. But the thing that's happening is those people that make a lot of money, they're sophisticated investors in most cases. In today's world, the world of digital technology, you almost can't beat the algorithms. So try day trading. And I used to teach this. We had a thing called 10-10 trading, and Sodi ran that. And we had lots of great stuff, but it was antiquated. Even when we were doing it, like, it was antiquated because you can't beat the machines and the algorithms. And right now, what they're doing, and this is already granted, okay, April 14th, yesterday, actually, the SEC granted accelerated approval of FINRA's proposed rule change under release, whatever the release number, eliminating pattern day trader designation, which means prior to the 14th, you had to have a $25,000 minimum equity requirement to trade, to day trade. And that was basically, day trading was looked at as three or more trades a week. So that's gone. Now that they've removed that. You got to just look at, like, here's the thing, like, who pushed this forward? And that's the question I always ask. Like, how did this happen? Like, why are we getting rid of something that was put in place in 2001 to protect us retail investors from ourselves, I guess, really is the best way to do it, or from, just the system. And they did that by putting restrictions and all these different things. But now it's being removed. And then you got to ask, like, why? Who's the one removing this? Well, brokerage accounts and the Robinhoods of the world. And why? Because they make money on each trade, but not only on the trade, they make money on the margin. So how are most people going to trade? Margin. Okay. How did 1929 happen? Margin. So, like, borrowed money, people got in debt. They got in over they got in front of their skis. And then all of a sudden the market went down and everybody's upside down. Just like that happens so freaking fast. So that's what's happening. It's exactly what happened. It's just a money-making ploy. I don't know how else to look at this thing. What do you guys think of this?
So, I mean, we've seen the level of influence that the retail investor has had on the stock market. Now, obviously, Charles Schwab and, all the big banks, they still hold a tremendous amount of weight. But we've also seen that smaller investors, and especially when the smaller investors accumulate, can make huge waves in the market. Just look no further than GameStop, the meme stop phenomenon. When people say, hey, look, let's all pump these things up, we can make something happen here. But it's going to come down to a level of consumer optimism and pessimism, confidence and lack of confidence. If the US consumer is like, yeah, we're super confident, the stock market's going to go up, and a lot of people push these trades. Meanwhile, the big people, the algorithms behind a lot of these particular stock trading platforms say, hey, look, fuck that, and shut these people down. Think about how much in terms of savings and in margin is going to be lost. We've just seen this correlation between how big banks are betting and hedge funds are betting against the European stock market. Now, what if a small contingency of European traders or people who want to trade in the European market feel, hey, you know what? I think everything's going to be just fine. Is it worth it to basically bet on the underdog? I don't think that it is. And it's going to hurt a lot of people at a time where, while we have a lot of abundance on paper, we're actually at some very, very high levels of fragility.
Well, I mean, we live in a time right now where betting is at an all-time high. People are gambling on everything. I mean, look at the Poly market and these different online trading accounts. And so, Kelchi. And so, when you look at trades, I think something like 50 to 70% of all trades are done by these high frequency algorithms, these high trading algorithms, and retail investors account for what, maybe 20, 30%. I mean, it's pretty small. And so they're getting dominated by these high frequency algorithms, and it's a tough thing out there. And so the question, I was reading about this the other day, and I thought it was a pretty interesting conversation, but somebody asked the question, and I'll ask you guys this, should trades, should they have a requirement where you have to hold a trade for at least 48 hours? So eliminating day trading, essentially. Like, you buy a stock, you got to hold it for at least a couple days. I mean, I get, maybe a company makes an announcement at the end of the closing day, but if somebody else is holding that for at least 2 days, it kind of still falls in line. It's an interesting question, though, and I'm curious what you guys would think about that.
Yeah, I think that the lobbyists for a lot of these brokerages would never let that happen. It's a good idea. It's good theoretically, but we know that there's so many people in big money that want this high frequency trading that move the markets. There's too many people who work for Ernst & Young, Bear Stearns, and Goldman Sachs that say, hey, look, we want this money so we can keep padding our numbers. It's too ingrained within our society for us to be able to take it out. Like, the cancer is already metastasized. The real question is, how can we control it?
All right, well, let's talk about something else we can't control, and that's going to go over to world, and we're going to add energy in this one. All right, let's talk about Iran.
Well, before we talk about Iran, let's talk about Atlanta. What's going on in Atlanta?
Oh yeah, money tank.
And Iran. It could be like
that. Everybody to Iran to Atlanta. With that,
Iran to Atlanta for money tank, which is coming up. My gosh, is that almost? It's like about a week away, isn't it?
Hey, we're kicking it off April 30th, man, with a little welcome reception for all the VIPs. Going to be a great time. Starts that Friday morning, May 1st. We're getting started right at 8 a.m. Getting together, drinking some coffee. First stage presentation started at 9 a.m. Got a full day planned. Going out that night to dinner with everyone. Kicking it back off Saturday morning, May 2nd. All day back in the room, networking, learning, talking strategy, meeting with the team, meeting with all of our clients, but expecting a full room of lenders, a full room of active real estate investors, and many handfuls of professionals and experts. And it's going to be a great time here in Atlanta. So be there April 30th, and we'll see you guys that evening, and then right into May 1st and 2nd. But we still do have tickets. It's privatemoneyclub.com/money tank. Very easy. Grab a ticket and let's have some fun there, Chris. I'm looking forward to it.
Guys, you know what I'm looking forward to the most?
James, you'll be there, James. Yeah.
I'm going to be there.
Yes,
I'm really looking forward to learning more about mobile manufactured home investing. I think that's one of my favorite things about Money Tank. I mean, Chris, I love hearing you talk too.
No, listen, I think it's everybody's, you just watch my YouTube videos. It's kind of like the thrill of listening to me talk isn't there anymore, but listening to the speakers that are going to be talking about mobile home investing, that I think is And it has been for quite a while, but now it's really front and center again because it's affordable. And what they're doing with, and I swim with this guy over at the pool, very, very wealthy developer, but he owns a bunch of mobile home parks and he's doing another one. And I just talked to him. He doesn't even call it mobile homes. Like he has I can't remember his name for it. He calls it something. It's
not manufactured housing or.
Yeah, it doesn't even call it that. I can't remember because he says, when I go to the town, I was talking, how do you get these approved with the town? He's like, well, we don't call them mobile homes. We call them this, and I'm like, I couldn't remember what it was, but we got into a long discussion, after we got out of the pool, and we were just talking about it. And he's just like, this is where everybody should be looking to invest is in, these type of communities, because the ones I have right now, good, bad, or, it doesn't matter what the economy is doing. We always have people moving in. And right now, because it's very affordable, and actually they're making them nicer than ever before, that people are really, really moving that direction. I mean, they don't want to live in a container. The tiny home thing works for some, but not most, so like, listen, my grandparents, like my entire upbringing, they lived in a mobile home park, like a double wide. Like you've heard that. Like I grew up at grandma and grandpa's house in a double wide. I loved every bit of it. Like I rode my bike around. We had little jumps over. I got to know all the kids in the neighborhood. Like it was pretty freaking awesome. And well, that's one of the things you guys can all learn about is how to invest in quote unquote mobile home parks.
And Stephen, is the guy, the gentleman who talks about node investing, is he going to be there as well?
Oh yeah. Top node investor, been doing it for 30 some years. I mean, I'm telling you, when I say there's going to be many handfuls of experts in the room, we have this thing stacked, and it's people you want to be around. I mean, you surround yourself with the right people and your life starts to change. And that's why, we look at who attends Money Tank. About half of the people that attend come to all of them because they come once and realize, hey, these
internationally
are so important. I want to meet
people
them.
Are coming internationally.
People just learn about us. Yeah. We have people.
Yeah, you're right. Yeah, we had a bunch of people from other countries that came. I'm like, wait, you came from where? Yeah, it's an amazing event. It's
I don't know if we have any Iranians, but from Iran or no.
Well, you never know.
Yeah, you never know.
Patrick
all right, well,
may
let's
show
talk.
Up this week.
Let's spend the rest of this show talking about the Iran war or the global economic conflict, whatever you want to freaking call it. It's wild. Trump's back to throwing around the 50% tariffs. I kind of saw that one happening, but anybody that's arming Iran, there was rumor that China was arming Iran, which that isn't a good sign. But China's also publicly warned the U.S. not to interfere with its ships, which I guess I could see that. Like nobody wants the U.S. interfering with their ships. And I don't know. I did a bunch of research this morning, James and Stephen, and I could not figure it out. Like, we've got control of the strait right now. I basically told Iran, go piss off. But I don't think we're not stopping ships and tankers from going through the strait. We're just controlling the strait, right? We're trying to get Iran to not charge these fees and just open. I don't really understand what the blockade or the U.S. Control of the strait is all about. But that's just me not having enough time to really dig into it. What do you guys think?
Obviously, you guys, I'm not a huge proponent of us going into Iran in the first place. I feel that it was.
I don't think many are, James.
Yeah.
I'll just be honest with you. I don't care. If we're Trumpsters or or Dems or leftists, whatever you want to call it. I don't think anyone's really wrapped their head around like why the frick did we go over to Iran? Like why did we have to do that? First, like they sold us on we got to bunker bust the nukes. We're like, all right, fly some of those cool planes over there and blow that shit up. We were okay with that. But now, like, it is pretty freaking evident why we went there. And some would say, oh, it's Israel. Maybe yes, no, maybe. But it's the dollar and it's oil. It's 100% oil. In
right.
Trying to maintain the U.S. dollar's share of oil. And because it's dropped. It's gone from 70% in 2000 to 58%. Like the decline
but Chris,
the entire story.
Here's something that I think that backfired. I think BRICS is actually getting stronger. BRICS is, the alternative that
BRICS
they wanted.
Doesn't have a chance.
The thing is, Chris, I mean, Iran is weaponizing the U.S. dollar against itself because they're now
believe that.
they're trading the oil that they're exporting, that they are allowing to go, is not going to be traded in US dollars. Is being traded in crypto, is being traded in alternative funds.
No, I understand that.
Yeah,
but they don't have control of the strait anymore. So like, look, their little plan just blew up in their face. Maybe they were weaponizing
ships
the
are
dollar,
still
but they're
getting
not
through there.
weaponizing shit right now. You ever seen the U.S. Navy?
Oh yeah, we have I think the
there's
largest
no other
Navy in the
nation
world. Yeah,
that can compete with our Navy. Period. Our Air Force and our Navy, like bar none. I mean, ground force, China's definitely got the upper hand there because of sheer population. But like when it comes to like, you know, the Navy, dude, don't fuck with the Navy. That's all I can say.
absolutely. I mean, that.
And Iran was like, okay, guys, you guys can have the strait. Go ahead.
Well, they're saying like, go ahead, but there's still a huge minefield there. And good luck getting through that.
Sweeper things. I don't know. I think about that like a street sweeper. You know,
I
kind
think
of goes around.
that was on your old Windows system where you had to click the minesweeper. It's a little bit more difficult than that.
I'm just kidding.
Yeah. This is going to be a huge dynamic in terms of how the U.S. is going to play into this whole Strait of Hormuz situation, because we are seeing an outflow of money that used to be traded in U.S. dollars, oil money that used to be traded in U.S. dollars going to alternative currencies. And granted, like the U.S. is trying to hold on to this, but this is a calamity of their own causing. Maybe was this part of the long play that, you know, Trump had in mind? You know, we straight down and we take control of the Strait of Hormuz. We build up what's going on in Venezuela. We have some control over Venezuela and our own oil exports. And now the entire world comes to us, and we come out as a savior.
It's interesting that you see that, because that really is, if you zoom way out, you can kind of see what's going on here. Like Trump's whole thing, and he said, you know, like bring back, you know, bring industry back to the U.S. and oil is the sole thing. We've kind of become an exporter of oil, and now we're basically taking back control of the oil, like in doing it, gosh, man, pretty forcefully. But in the long run, it'll be interesting to see how this all plays out. I mean, wars are never good, but like if this works and the U.S. does redirect some of this and control some of this oil, I mean, damn, man, that would certainly be really good for the United States of America.
It would be looked at in history as a stroke of genius. People may not agree with the way that it happened. I don't like the way that it's happening, obviously. But then I also have to look at the other side of the coin as well. What if some of these countries say, you know what, we don't want our oil being blocked? You know, there's some pretty powerful nations that don't want to see that happen.
The nations that like really matter, like, you know, I'm just reading here, the BRICS expansion now including Saudi Arabia. Saudi Arabia, like there are like, it seems like we're pretty close with them right now. UAE, we're pretty close with them. And then India, we just struck that deal, or supposedly we struck that really good trade deal with India. So like, those are the big ones. And I'm sure I'm missing a few, but like those are the monsters in the playbook. So if we got them already on our side, like I'm sure the administration.
What about Russia and China?
Well, Russia's that's
Russia and China. People now go to Russia more because they lifted their oil sanction. And then China says, we want our oil. So either Russia starts selling more oil to China, and or Russia sells more oil to Europe. And this particular gambit backfires massively because Venezuela was not developed in time, and it takes a decade to build up Venezuela.
That's true.
You know?
Yeah. So, I mean, those are your missing links. So I think you nailed it. Like China is the big one. And China's like, the scary thing about China is, number one, their size and their population. But number two is like, you just never know what they're doing, because they control everything. Like that's what communism is. I mean, they control all of it. Same thing with Russia. You have no freaking clue what's going on.
How far ahead they are in terms of a lot of their
no
technology,
idea.
because
like
they
the
have
US
all of
is
our
kind of like, oh, Trump's like, oh, we're going to do this, and it's on, you know, his Twitter or X or whatever you want to, not Twitter anymore, X. You know, it's just like, it just seems like we are just so transparent, or just boisterous, whatever you want to call it, that everybody knows what we're doing. Or maybe that's part of the game. Maybe let everybody think they know what we're doing and do the complete opposite, which actually Trump has done a pretty damn good job of playing that art of war playbook.
I think you're giving him way too much credit. I really do. I don't know.
He's a master negotiator. Let's not.
I don't know, man. He keeps doing it over and over and over and over.
I don't know. Vance walked away with Vance walked away with absolutely nothing. And I mean, they can keep trying to negotiate.
Speaking of the U.S. military, so you don't see this very often, but these are the Air Force Thunderbirds and the Navy Blue Angels flying together in formation, which is a rare sight, but definitely cool. I'm going to play it for a few seconds. Right over Blue Angels in the middle, flanked by the Thunderbirds.
That's
pretty
wild.
cool. Saw a bunch of different angles of that over yesterday, which was amazing. They're flying out to an air show here in Lakeland, Florida, called Sun and Fun, which is an annual show. That's a pretty big one that a lot of people go to. But nonetheless, we'll see what goes on. I mean, we're a month and a half into this Iran thing.
Too long.
And how many times have we been told that it's almost over? It's almost over.
Well, he just.
Well, it's been a month and a half. And it pretty much is over, right? They don't have any defense left.
It's still going on, and we just sent out an entire fleet to quote unquote stop it. I mean, we've been told
no. We
no
sent
less
an
than 3
entire
times.
Well, hold on.
4 minutes ago, Iran war very close to over, Trump says. And
we sent out an entire fleet
same
to create a whole new shipping lane. Like, we're not even messing with that whole thing. They put
Exactly, yeah.
They don't even know where their minds are. Trump's creating a whole new shipping lane where he says, 2 birds up to you guys. You can't do shit about it now. I got my own spot. So that's what he's doing. We'll see.
We will see. I until it actually comes to fruition. I mean, his word in about $5 will get you a foot long at Subway, as far as I'm concerned. I don't believe it.
Biden's still out there just causing all kinds of trouble. You see Biden calling that dude calling him Barack Obama yesterday.
I got to look that up. It sounds hilarious. And I'm sure that you guys love it a whole lot. I could care less. Because there's some other stuff that Trump has done that I'm sure you guys have seen that actually pissed off a lot of his base. And we don't have time to go into that right now, because
the doctor or Jesus post that he put out there, and actually, because most people were just like, no way he put that out, and then he actually said he did. Yeah, that wasn't cool. My wife's pretty pissed off about that.
He pulled it down, though. He apologized. He said, I see how it was misinterpreted. He pulled it down.
Oh, he apologized.
See how it was misinterpreted? Really, dude?
Yeah.
Okay. Anyway.
Just because he's got beef.
There's a lot of shit. There's a lot of shit Trump's doing that I don't agree with, that I don't like. But I do still think he's probably got some big plan, and it is in motion. And if we could just get away from this Iran shit and get away from just the shit he says, I just can't get good with some of the stuff he says. I just can't. But nonetheless, I would say, who else would I vote for? I mean, definitely not Kamala.
Mm-hmm. But I mean, in terms of the Iran longevity, we're also seeing a war of propaganda as well. I mean, Iran keeps putting out these videos into
the
Legos, and into, obviously they are entertaining. People are marveling at the AI of it all.
Pretty wild.
But I mean, when we look back at wars, so much of it is propaganda. And what is the general consensus? Like they used to drop flyers and leaflets in Vietnam. Let's look at what used to happen in World War II with we are the best, and America what is Uncle Sam, I want you. Like, all of these propaganda videos really playing a part in terms of the consumer and public sentiment for which way they go, and how publicly people protest these particular military actions. It's gotten to the point that people and a lot of the general consensus are willing to overlook all the atrocities that do happen in Iran, almost making them look like they're the good guys on a global empirical scale. And the truth is obviously they're not. Yes, because a lot of people aren't educated in what goes on in Iran. They're not educated in all the atrocities that they do. They just see Lego videos. And they see that America is going over there and saying, hey, cut this out, and us just invading.
Give us our Legos back.
Yeah. So that's something that we have to really be aware of, because this could be almost an anti-American moment. And because we're so supposedly protected by free speech, as long as we don't yell fire in a movie theater, we may see a lot of people speaking up against this as well. And it may be anti-America. It may be anti-war. And then, of course, there will be some people who are just going to say anti-Iran as well. But I think that Iran is outplaying the United States in terms of the level of propaganda and consumer and public sentiment, and having people being more sympathetic to their side, which I feel is a massive failure.
Yeah, well, let me just read a couple things that I think are kind of takeaways from the Iran thing. Is, here's the things I can tell you. And again, I did a YouTube video on this. You can go on to @the Chris Naugle and watch the YouTube video, but it pretty much sums this up. Oil at these sustained prices what it's going to do is it's going to destroy demand, and you're already seeing it. There's less cars being sold right now. Car manufacturers, you haven't really heard the rumblings, but they're definitely hurting. I talked to my buddy who owns a dealership, and then we took our truck in, and they said, yeah, it's been kind of slow for the spring market. So less cars are being sold. Home sales, new home starts, way down. Okay. Fewer flights are being taken, contrary to first class flights, but fewer flights as a whole are being taken. And economic activity, like it all relies and hinges on oil. And if oil prices go up, that 100% is inflationary, and it will drive costs higher. It's springtime. Has anyone priced grass seed? I know this is crazy. Like, go to Walmart or go to Lowe's or Home Depot or your Ace Hardware, price grass seed, and then just go online and look at what grass seed cost last year. It's like doubled in cost. Grass seed. I don't know why, but like when you really think about all of this, like you have to see it. All these things are happening right now, and it all points to one place, and that is a recession. Or are we already in the makings of a recession? Contrary to, the actual economic pinpoints that tell you, 2 consecutive quarters of declining GDP. We still have employment numbers are still good. They're climbing, but the unemployment numbers are climbing, but they're still good. So it's just, when you look at this, like this oil thing has to get situated pretty freaking quickly. Yeah, that is like pouring, I don't know, that alcohol that you put in those race cars onto the bonfire in the backyard. Like, boom. That's about where we're at right now. So you just they gotta figure this out. They really
absolutely.
Yep. Steven, anything else?
I don't know, man. The Masters, congratulations to Rory McIlroy for defending his Masters green jacket and winning back-to-back. It was kind of a fun tournament. Really enjoyed watching that. And baseball season's back in full swing. Some pretty good games out there, some pretty good plays, but it's always a fun time of year with spring coming and, the kids winding down to the end of the school year. And looking forward to being in Atlanta in a couple weeks for Money Tank. But other than
make
that,
sure you grab your tickets. If you can't actually join us, get a virtual ticket, get the recordings. That's also up there. I don't know if we have those up for sale yet. I believe we may. But there's definitely virtual tickets. But we got lots of seats left at the actual event. And just so you all know, Atlanta's a super easy airport to get to from pretty much anywhere in the
busiest
country.
Airport in America.
Yeah. Tickets are not bad. We've been checking them from various parts of the country, and they have not spiked too much. Delta is, like you said, or Atlanta is the world's busiest airport, so lots of options.
Right. And the TSA lines have come down as well. So now you're able to get through in reasonable times. I know that's been a lot of people who've been worried about that. But my friends over at TSA Atlanta, they've been like, a lot of us came back to work, and now we're just trying to get things back to normal as quickly as possible. So I'm pretty confident that by the time that Money Tank rolls around, you're going to have no problems with TSA, and we'll be welcoming you there.
All right. Well, with that being said, folks, join us this afternoon, 1 p.m. Eastern, by going to chrisnaugle.com. That's NAUGLE.com, and register for the wealth webinar that happens at 1 p.m., where we're going to be going over the 6 laws of wealth that you definitely need to know, but how to create buying power in lieu of a recession. So we'll be seeing you this afternoon, and can't wait. With that being said, thanks everybody for joining us for this episode of WTF. Say bye, Cashy. He doesn't really
Thanks,
care.
guys.
Meow.